All right. Welcome now. Welcome, guys. Welcome. This is the first day of the rest of my life. Rest of my life. Today, I'm just going to basically be doing I would sort of say like, I don't know what to call it, but it's sort of an idea of what I would be looking into in the near future. Now, I'm just going to be putting in scattered information. Bear in mind, guys. I'm just going to put in scattered information, but the objective is that when we put it in together, we're going to actually get something out of it. All right. So the reason why I drew this thing here, which is type 1, type 2, type 3, is because I wanted to give a narrative of what I anticipate price to do in terms of the sessions that I'm going to play. Okay. Now I just said the main part of the video, the early part of the video, not this video, but the previous one, the intro. I said that I'm going to be focusing a lot on London and New York, and also to add on to that, I'm going to be using higher time frame narrative to basically aid my bias to kind of give that idea that we are going this direction on daily time frame, weekly, monthly, and the 4 hours also going to be a contribution to what I'm going to be trading as well. Bear in mind, this is just a documentation of what I see. And once you also see the same thing, or you see more or less the idea of what I'm talking about, then we pretty much have a good time. You know what I mean? You know what I mean? We're going to be trading like no one's business. But the idea that I had within these three types, né, is I don't know what to call them, but I just understood that these are just the setups that I will basically get to see every single, I won't say every day, but I see them more often in price action. Now that's if you're using the lower time frame and you like to scalp and obviously you like to just jump in and out and all of that. All right. So these are the three types of ideas that would come in. The first one is London, oh sorry, New York, right? So these three zones represent the sessions. Now bear in mind it will be using kill zone times. So we're going to be using specific time frames that are going to be uh, in, I'd say, in use for what we're going to be doing or how we're going to be trading. All right. So the first one is Asian session. Please also reshift your time zone to London time zone or New York time. Sorry, New York. Now, the reason why I'm using New York is because it makes it easier for everybody to understand what's currently happening in the whole context of London and New York. But the kill zones that are currently being used for these guys is the first one is Asia, which is around 8 p.m. New York time till 12 p.m. or in other words, midnight. The second kill zone is London kill zone, which occurs around 2 a.m. New York time and 5 a.m. New York time. New York time is usually between 8 or 7 and 11. I'd say 7 and 11. If you use that type of structure, you can use that. So the whole concept behind these three type setups is that I'm going to incorporate it with a bit more on fundamentals. Reason why I'm using fundamentals is because it will aid the bias into giving us the right or the so-called I don't know what to call them. It's sort of like one of those volatile moments where you get to see price move sporadically. Um, if you have seen these ideas and you don't know why these things happen, you just need to understand that banks work in different times and banks work in sessions, and those sessions are working the way you see this price action right here. So the first one is New York, right? New York being the high of the day, and it also closes below. The reason why that would happen is because Asia would consolidate within a tight range, and then London would basically sweep both highs and lows, but still consolidate as well in a higher range to allow now New York in the news release to break above and also come back down. Also now vice versa as well. Also you have the next one, which is sorry about that. So which is the next one is the Asian session where it forms the high of the day, and then London and New York continues, or it basically does the opposite direction, whereby Asia sets the low, London is the middle guy, and then New York basically falls within the range of the pullback of London. All right. And then the third type is basically Asia sets the high or the internal high, so to speak, for that particular day, and then it sets a low. When London comes in, it takes out one of the swing points as well. So when that happens, is London would come out. Sometimes what London would do is it would take out Asia, right? And then it take out Asia high for an example, and then it takes out Asia low. And then New York basically comes after that long sweep. Let's say for an example, they run like this. What would happen is that sometimes price would shift and it would give you this idea here, so to speak. Wait, let me move this guy. Sorry. There you go, right there. So New York basically sets the whole entire range. So not New York, London, and then New York basically finalizes it as well. Okay, that's how I basically get to see it. So now let's just hop in today's trade idea, and let's get to see which one of these three got to play in terms of price action. All right. So when we get to look into today's trade setup, which is the 29th of Jan of 2024, we can basically get to see on this whole structure itself that when New York, please be mindful that I'm currently using New York. Remember, guys, I'm using New York time zone. All right, I'm using New York time zone, which is basically UTC -5, and this is trading view. So what you basically see here is the beginning of New York, all right, the opening of New York, which is the 0 0. And what happened within that range? We entered a kill zone, which was between 2 and 5. Let me just actually drop this a bit lower so you can actually see, and you can be able to see the whole concept. Right? No, let's do this. Right. Well, that is that. Alright, and I need to discuss it. So let's look at it from this perspective. All right, so we have the 29th, which is midnight, okay, New York time, bear in mind. So what happened is that price came into, first, let me actually show you the range of Asia. Asia starts between 8 p.m. and midnight of New York. In South African time, that's roughly around midnight till around 4 to 5 a.m., right? And I'm not sure about the other time zones that you guys are also watching from as well. But just factor it in from the New York perspective. When you look at the open, all right, this is the current open, which is this candle. Let me just use that. The main concept was the London sweep of Asian high to now London drop so that New York can come back, mitigate part of London, and continue within its run. This is the concept that I showed you now, which is this idea whereby price action would sometimes create that type 3, that's the third type, where price would run out Asia, come down, break Asian low, and then New York basically takes the objective and as well, and then continue running um, for lower lows and also targeting sell side liquidity. Please bear in mind that I will also add in the all these other things that I'm talking about, but I'm just giving you the narrative of what happened today. Okay, So when Asia, let's just remove everything. Let's just remove everything so that we can see it as blank as we possibly can. And then we just draw a quick, I hope it does actually get it right. Let's see. Yes. All right. So let's start from the beginning. Okay. As you can see, price is just doing weird things, right? But what happens is that price doesn't necessarily just do random things. It actually does something because it wants to seek something. So just understand that now there are two things that you need to know. All right. There is liquidity and there is fair value. All right. Now, shout out to Ario Trades Ario. This guy basically helped me understand this a bit more in price action. So there's two things that get to happen. Okay, there is liquidity hunt, DT hunt, and then after that there is fair value. There's fair value. These two guys, they basically interchange whether we like it or not. This is what happens with price action. And then I'll also write down the other two things. External liquidity or no liquidity and internal liquidity. Okay? So external liquidity and internal liquidity, they basically correspond with all of this. External liquidity is when, in retail terms, is when a low gets taken out. Like let's say, for an example, this low gets taken out. Internal liquidity is when price runs into this thing here that you see. You might not understand what it is yet if you're brand new to my channel, but this is called a fair value gap. A fair value gap is a huge imbalance in between two areas of price. The reason why that happens is because there's less efficiency in the market by offering a specific participants in the market to say that okay, we're going to be bearish and we're going to be heavy bearish. That's when the influx of volume gets introduced, leaving this huge candle drop right here. I will explain a bit more about it, but just know that it usually takes about 3 candles for it to form, and not every fair value gap is the right fair value gap. It has to be accompanied with also other factors to also ensure that you are on the right side of the marketplace as well. However, that's the first one, which is internal liquidity. Reason why I'm saying it's internal liquidity is because when you look at this range right here, when you look at this range right here between this high and this low, this is internal because it's coming back to cover all of this inefficiency that was created going downwards. All right, that's the concept behind it. And basically that's what I'm seeing at the moment is that when price opened, right, it opened at that level. Look here, there's inefficiency in that location. But also bear in mind that in order for this to play effect, it should have this concept where a high gets set, right? Basically this idea, guys, let's just say that this idea that I sent here, or this idea that I showed you guys, where are you, my friend? Oh yeah, I forgot, I removed it. But anyways, it is what it is. 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 The main concept, the main objective is that when price runs Asia high, look for a PD array, or sorry, look for a support zone. That's what I'm learning so far. Look for a support zone that is above Asia, of which price would actually step into and then continue to follow suit in the direction of the order flow. Order flow is the direction of the market. Same thing as saying it's downtrend, it is uptrend, or it is consolidating, right? That's the basic concept behind it. In this case, when we opened, look at London kill zone. I hope this is on time. Let's just quickly look at the 5 minute. Look at the 5 minute just to quickly understand where we were. If you get to see that with Asia, price ran above the high before coming back down. So when it came back down, what I'm understanding is that they also left that huge imbalance that I was talking about earlier. All right, that's what I call my favorite gap. I'd like to say my favorite gap, but it's just a quick color change. And also, what I see is that price came from that high, it went to that low. They broke that high, funny enough. So when they broke that high, they end up taking that high out and then they came back and broke the low. So when I see what they currently did was they actually took out this low right here. This is more like a short-term low, but it's also called a swing low. If it has one, two, three, it's like a head and shoulder but upside down, but using wicks. It's a head and shoulder using wicks. So look here, we broke that high, and then price came back into the fair value gap. Bear in mind, it's also a fair value gap. So we came in, we dropped out. This could be an entry price as well. So if we get to draw it like this, we get to see exactly how basically the whole price action get to play out as well. So the whole concept behind it was to, I'd say it was to basically target this low. Let me just actually have a look. So we targeted this low. Now this is London, by the way. This is London. So London came into that fair value gap, also within that low. If you wanted to have used a higher stop, this would have been perfect for you. Obviously, we first wait for a sweep, move to a market structure shift, price comes back, and basically this is SMC, by the way. And SMC is basically just looking for a liquidity sweep, which is what just happened here in London. They broke below a significant short-term low, and then they came back and retested that low so that they can jump into the fair value gap, which is the gap that needed to be mitigated or filled with a halfway or full way, or it just basically just taps it in. There's three ways that it happens. I'm still going to learn about those, but this is just a simple concept behind the price action that we're talking about. It basically ran into the high. We could have been an execution. I'm just saying it could have been an execution. All right, I'd say it could be an execution because it looks good. Reason being is because we are currently within this range right here. If I could say, this is like the range that we're currently using, so that price would basically break below, and then price would come back, and then we the objective is that we end up selling off because the order flow at the end of the day is bearish, and it's been bearish for quite a long time. So it's sort of like a follow suit to the market, because what happened with this idea is that if I can actually get the right one, this was the idea. So we consolidated. Ah, wrong one. Let me see. Move. Nope. Wrong one. Let's see. Yep. Ha! This is what happens. Okay. Um. Let's just quickly delete this. All right. So this is the one. So what happened is that price came into a consolidated area. So in other words, it ranged. We broke below sell side liquidity. In other words, these lows right here, we took them out, and then we reversed and broke these highs. We jumped up, and then we came back. But remember, when you sweep and then you break, you create a market structure shift. So price would respect sometimes, and then what would happen afterwards is we jump off out of that, and then we break below again, creating this funny structure right here. Just bear in mind that price also does that from time to time. There's one that does that, and it's very effective. It also gives you one of the longest trade ideas as well. Just also heads up, heads up, heads up. All right, let's finalize this thing. All right, first entry idea. First entry idea is mitigation, fair value gap. mixed with an order block or support and resistance or supply. Price comes down. First target is this guy. All right. Unfortunately, we didn't reach him. We only reached him in New York. So when New York was open in this area right here, so let me show you when New York gets to open, which is 8 a.m. And all right, 8 a.m. Yes, this is 8 a.m. This is part of New York session now. So we're jumping into New York session. And what happened is that price did more or less the same concept. We first swept below. Here we didn't necessarily sweep below. We just basically just tapped it just below Asia, rallied above. You know, the reason why they actually do this is because the algorithm, so to speak, or the big banks would basically just tap in so that it can target the guys who want to be bearish as well as the stop losses that are sitting right here, so that it can just gather all of that money, which is also called liquidity, to bring it back up. For the ones who wanted to sell, they get hit with the stop loss right above Asian high. And same concept again. The guys who want to be momentum traders who want to buy, they get caught in this range and then they get pulled back out again. So this was more or less like a tap, pull out, and come back and continue with the range as well. In New York, more or less the same concept. The reason why I'm saying so is because they tapped these momentum traders who wanted to, you know, the breakout traders guys, you know, those guys who basically look at this idea and be like, oh, I'm jumping in. It's basically like looking at lower lows where price will pull back and then price will just drop below the low. Well, in this case, sometimes price will just tap in and then reverse against you. And then you'll be like, okay, cool. The guys who basically get hit are the guys who, say, for an example, or I'd say the guys who, let's say, for example, you executed the trade here, right? I'd say the guys would have their stop losses up here. Look what happened. Boop, nyomp, easy, nyomp. Price comes back down. This is just an idea. I'm sure you've been through this process where you try to trade a breakout and then it just nyomps you. Okay, that's slang for like it eats you or like something along those lines. But that's just basically how the trades would happen. So you need to be vigilant with these types of entry point ideas. Né? And then the next one is the fact that okay, we came and broke above those short-term high, and then we finally closed the low afterwards. The reason why they do that is because they just want to gather more liquidity. Remember now, we don't trade as much as those other guys. They have more volume than we do. So pretty much it's much easier for them to sell here in particular. So we can just put quick, just a quick one. Check, you check, you check, you check. You understand? Excuse me. So we put just a quick one here. So this is what happens is that price will just jump above the swing high or short-term high and just nyomp, and then price will come back down. Certain reasons is price action would be filling in a gap, right? We could be filling in a fair value gap. One, two, we need to seek liquidity. One, first is fair value gap. Two is seeking liquidity. If those two are combined together, that makes it much easier for price to just quickly come back. Remember, this is algorithm. It's a dynamic algorithm system or algorithmic system that basically drives price or drives the idea of price in a specific pattern, but it changes over time. It sort of like morphs in different phases, but the concept behind it stays the same. That price will do three things or four things, so to speak. It will do these four things. Okay, we create a high. Just think of a head and shoulder. It'll create a high and create an internal low, and then it will break that high, and then it will break the low that caused the high to get taken out, which is a market structure shift. Price will come back internally and then continue after that. Ish, yo, ish. But yeah, hope you guys get to understand. It's a simple concept. This is the same concept that plays everywhere in price action. It's just that it's going to play itself in different ranges as well. That's just the idea behind it. So when we closed in with New York, what happened is that when that idea came into play, the same concept that I showed you is here. Sweep, liquidity sweep in fair value, in a fair value gap, right? Right. And a market structure shift to initiate with the bearish order flow to say, yeah, we're going down. Let's remove this guy. He's making a mess. All right, remove this guy. So liquidity sweep, order block mitigation, market structure shift, order block creation. It's sometimes a series of order blocks. I'll explain what order blocks are in the later videos where I'm going to be talking about like the what you call this thing. I'm going to be talking about like just the basic teachings of what I understand about order blocks, but that's the only concept that you basically get to understand. Fair value, meaning that price tapped into the range that was broken, right? Liquidity sweep before mitigation, mitigated, order block created, price gets taken out. Same four concepts will play everywhere. No matter how much you think, how much we can debate about it, it's more or less the same concept. And I'm not trying to justify anything, guys. I'm not trying to justify anything. I'm just saying that this is the same concept that you see right here, playing here internally, playing here, playing here, playing there, playing in this idea, playing. It's just basically playing everywhere. Same thing. Liquidity sweep, mitigation point, price runs out, price mitigates order block, and then price continues. It's basically same concept. Sweep, that little green candle taking out that black candle, that's an internal sweep. If you don't believe, let's look at the 1 minute. If you look at the 1 minute, you'll just basically see the same idea. If you don't understand, you just have to rewatch it again. No joke. Sweep, market shift, price comes back, taps it into the sky here, and just dips. Same concept, I think here as well. Sweep, same concept, guys. Sweep here, mitigation. See, you sweep, you jump in, and you mitigate the order block again, or like if you remove it like this, you can just say sweep, mitigation, market structure shift. It went up. See, market structure shift, check. And then price would come back at a later stage to come and mitigate this low. Holy shutters. Either it will come back tomorrow to come and mitigate and then continue higher for higher prices, or it will just come in and then just break it below and then just continue rallying down. So the same concept applies. It's just a quick head and shoulder concept where price breaks, runs above a specific high. All right, I still have to learn this thing as well, so I'm still getting the hang of it. So I'm just giving you the basic concept of what I'm looking for in terms of price action. So remember, I showed you the three setups, right? I showed you the three setups. I'm just going to show you again one more time. So consolidation with Asia, and then New York takes it out. That's the first one. The second one is basically when Asia sets the high of the day, and then London comes back into the Asian range. It breaks out of the low of its own low. New York comes back in the London range and breaks again. And then the last one is the main concept, which is London high of the day. It breaks Asia's low, it comes back and then continues. And then New York basically follows suit. You just know that New York will always follow suit. The only time New York doesn't really follow suit like this, or the second type structure, is because price would be given on the fundamental aspect. Price would be playing only New York's news release. When New York news release occurs, that's when you will actually see this huge mad spike where Asia would consolidate and then London would play within Asia and then New York just does this and just floods money, bro. That's when you actually see this concept. And even if you draw it like this, guys, look at that. Look how beautiful that is. Price is the high, swing high, price market structure shift, and then Asia plays within this high, like it breaks the low, it takes this low, and then it forms that high. London consolidates internally, price breaks above, takes out this short-term high, which is the right shoulder. Price runs into an auto block, which is this range. Sometimes it can be the 50% of this range. How you would see that is by you basically just mapping out this or the right shoulder or the I'd say the first shoulder, rather map that out first and then put it above that high and then put your high above the head of the head and shoulder. So put it above the left shoulder and the high of the head, and then you can anticipate price coming back and mitigating. As long as this guy doesn't tap into it like this, which means it would cause price to just rally into something along this line, this idea here. However, if this doesn't happen and this guy does this by mitigating something called a breaker, which is a range in between the head as well as the shoulder, that range right here. If price just comes in there, just anticipate something similar to this. But just bear in mind, this is just like manipulative. So sometimes it can even do this and then just continue falling. So you just also gotta bear in mind that there's a lot of like dynamic into the marketplace that you have to factor in so that you can basically get the right context of what has currently happened in this marketplace. But I'm just showing you one of the trade setups that happened right now, which is London being high of the day and New York or London close being the low of the day. And basically what would happen is that you would get a open. Ah, shucks. No. So you get an open, all right, just as an example. I guess it just doesn't show. So it's an open of price. This goes up, it follows down, it pulls back in, and it closes. This is the algorithm in itself. Whether you see it like that, whether you see it like this, it's the algorithm in itself. That's the concept behind it. Open, high, pretty much it's open in this range, high, breaking the previous high, low, and then close. And if you look at the candle itself on the daily time frame, there's just this one candle alone. I mean, yes, we have about an extra, I'd say, if I can actually see that can push the range. Nah, it just doesn't work. Okay, so let me just use this. I mean, let's say put it within this range. Yeah, roughly about 55 pips. Yeah, around about 55 pips. More or less 55 to 60 pips. 53, let's say. I mean, just that alone is just like powerful on its own, you know. But also just understanding that in order for you to receive this type of strategy or this idea, which is London high of the day and then London close being the low of the day, is that you have to wait for fundamentals, which is the economic calendar, which will show you that London has some news releases that are going to be occurring. Sometimes it doesn't, and then basically price will just continue like this and just randomly excuse me, then basically does this and continues, and then sometimes it just does, and sometimes it does this based on the Tuesday high of the week or Wednesday high of the week based on London. So bear in mind, when you see the economic calendar and you see one of the countries playing, that means that those one of those two are going to be transferring money from one point to another. That's what I understand, is that they're liquidating price from one entity to another, and they're using clearing houses to basically handle those structures. If you don't understand what I mean, just have a research so you will understand what's currently happening. That's just my basic concept of understanding, when it comes to price action. It's not necessarily just fundamental to doing shit. No, they are moving money from one position to another. But again, this could be speculation, but if you want to do your research, you can do your research just to understand. So I hope this settles everything, guys. I know it's a long ass video. Sorry. But I'm just hoping that you get to understand this boringness of of much of the trading itself. So, because I'm just going to be documenting a bit more. So, what I'm going to be doing is that every day I'm going to be doing analysis of basically what has happened in price action, just to also show you that this thing plays every day, whether it is London being the high of the day, Asia being high or low of the day, New York being high or low of the day. Because one of those three sessions are going to set up a high and low of the day. One of those three, whether it's London, New York, or Asia. So you at least will get a chance to see it from my channel that this is the idea that gets to play out, and this is where we're going to be mitigating in the near future. I just want to show you fast, 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 fast. Let me remove everything fast. Remove everything, right? Um, let's see. What we will do in the future is that we are going to be using a bit more of the 4 hour time frame. The reason why I'm saying that is because 4 hour basically follows suits in what um the daily what I'm saying. Wait. 4 hour would basically follow suits in what uh 15 or like an hour to 15 minutes to 5 minutes, what those three can like those sides would basically play around with. You may not understand what I'm saying right now, sorry, but if you look at this, right, remember, there's two things being mixed into this actual range itself. This is a volume imbalance. This little gap right here, this is a volume imbalance. It's just when price just gaps at random, and then it's basically just to refill a price order fast so that it can rebalance itself and then continue in the direction that it was intended. It usually happens between the, the I think the week opens, the weekly opens. Sometimes it happens on weekly opens. Sometimes it happens almost at the end of the week. Like even here, there's also that imbalance right there, and there's a mixture as well. It's just a mixture of everything. It's an order block, which is this huge block candle right here, this green candle, and price basically tries to rush as fast as possible to break below this range. Remember, institutions are entering at this level, and the fact that they balanced it out and they bounced it off here, also initiating a pullback, an internal pullback right here. You remember, I just look at body closures, guys. So please bear in mind with me. I just look at body closures just to see what exactly they're trying to do. So looking at it from this perspective is that they rallied above to come and tap into this supply here. They rallied down with these two candles breaking the gap, voluming balance right here, which is the same concept that they did here, and they closed it. Remember, leave a gap so that I can fill it later. Understand that concept. I'm going to leave a gap so that I can show you where I am, so that when I fill it later, you can follow me and then I can continue with you. You get what I mean? So let's continue together. So the same concept. We closed, we came down, leave a gap so that when you come back, I can come to you and then you can follow me and then we can continue. Idea was to target this low, but The main concept was we first sweep, break above this candle, but we don't close above this candle. And then we come, market structure shift, and then you can anticipate some sort of retracement of the, like, some time, I don't know, maybe just something along the lines of this drop, and then maybe just continuing down here. If this plays out, that's god dope. But if it doesn't play out, then we just basically revert it back. But you can also see, if you can't understand what's currently happening in price action, just use this idea. Because I've been using that from time to time, so that I can get to understand where we are, so and how we can basically use that to our advantage, which is also like this huge block right here. Now remember, we're using this block, so this could be the concept behind of taking out this now. See, this could be the idea. Probably tomorrow, the next few days, this could be the idea to finally close it, because remember, there's orders right here and they haven't fully closed up, just closed this two candles right here. They left the gap, but they didn't fully close it. Body closure wise, look here, look at this gap. Body closure wise, guys. I'm not saying that, okay, using the wicks, but if you use the body closure, look at this gap. They still need to close this gap here. But now, obviously, since we use wigs, that's just one of those things we based on. We're just gonna quickly and then we rally above. If that's the case, I mean, I called it. If that's not the case, it is what it is. But hope you guys are going to enjoy these videos. I know it's long, I'm sorry, but tomorrow's another video. We're gonna have some fun, and this is going to be a long ass session together. But hope you get to enjoy it, and take care.